I'm Priya Sheth and you're with me on the Daily Dispatch. The startup world is buzzing today with stories coming from Unacademy, Delivery, as well as East My Trip. Well, headline number one: on an acquisition spree, EdTech unicorn Unacademy has acquired Swiftlearn, which is a platform providing live online tuitions for CBSE as well as ICSE students of grades 1 to 10. The acquisition is in line with Unacademy's plans to strengthen its position in the K-12 segment as well as optimize its product offerings in the space. Well, headline number two: the Lal Street seems to be buzzing, joining the list of startups in the queue to go public. Delhi NCR-based Delivery has filed its DRHP to raise about 7,460 crore rupees. The company will raise about 5,000 crore rupees through an issuance of fresh shares and will have an offer for sale of about 2,460 crore rupees from existing investors. And finally, travel clearly seems to be coming back with vengeance. Online travel platform East My Trip has recorded a quadruple growth in consolidated net profit for the July to September quarter of FY22 at about 27 crore rupees. The rise in profits can be attributed to the over 300% growth in revenues from the air segment. The net revenue across segments for Ease My Trip in July to September FY22 also rose over 4 times to about 43 crore rupees. Well, moving on to a very interesting guest we have today, a company that's been in news, Purplle. We have with us Manish Taneja. Thank you very much for joining us today on the Daily Dispatch. It's big news, $75 million in terms of fundraise. Lots of reports out there in terms of how this perhaps could be an inflection point for Purplle. So tell us a little bit about the fundraise and fund utilization plans.
Thanks, Priya. Thanks for having me over. I'm not sure if it's an inflection point or not. I think probably there was an inflection point 2-3 years ago. I think since then it's been only an upward trajectory. But yeah, look, this fundraise is quite special for 2 or 3 reasons in my view. I think the first is I think this is a fundraise we've done in record time. Almost like it took us just 3 months to raise this kind of capital from start to finish. I think we also saw unprecedented interest in investing in Purplle. So really thankful to all the investors who shared their interest in us, but at the same time also obeyed the timelines that we had set for them. And third, in my view, I think Kedaara is absolutely one of the finest investors we could have attracted to our cap table. I think it's a match of minds in many ways. I think it's a good culture fit for us as well as for Kedaara, that we both are partners now. They're also one of the best private equity funds in India, about $3 billion in management. They've taken many companies public. It's something that we will have an ambition of at some point in time in future. So their guidance and their expertise there would be really helpful. And at the same time, they've been big investors in retail and consumer. Earlier, like their investments include Manyavar, Lenskart, and Vishal Retail. So they're big believers in retail, and that's where we thought it would be great to have them on the cap table.
Right, interesting perspective out there. But the beauty and cosmetic space seems to be buzzing, and especially we've seen the Nykaa IPO also attract a very good response from the market. Tell us a little bit about valuations. Do you think valuations are high in the space at this point in time?
I think the way I look at it is as follows. I think companies have graduated to become much larger and more stable companies. And so maybe valuations have gone up from where they were 2 years ago. Are they very high, very low? I mean, it's not for me to comment. I think, I think public markets are a better sort of, I would say, a judge of valuations. I think when you go out to raise money from private investors, you have a select pool of investors that you want to take capital from. And so, it needs to it's basically between a valuation is just in the eyes of the beholder. So, but I do think that, maybe valuations are a little higher today than where they were 2 years ago. But I guess companies have matured quite significantly, and COVID has helped them sort of become much larger than where they were 2 years ago.
Right. I want to talk to you a little bit about the demand this festive season. We're seeing a lot of buying activity shape up as well. In terms of Purplle, what's been the kind of
trajectory on ground in terms of growth as well as overall GMVs? Where do you see yourself headed?
It's been a 3-year consecutive growth rate of close to 90% in the second half of the year. So when I say second half, I mean September, October, November, December, Jan, Feb, March. That's the second half of financial year. So we've been growing at close to 90% CAGR for the last 3 years, while the market may have been growing at about 35% online. So we are clearly capturing market share there, and that's been the ambition, and will continue to stay as the ambition. I think there is a renewed interest in buying in the minds of consumers. Last year, I saw this trend of naturals leading the show, where we had, brands that were clean beauty brands, especially in hair and skincare, sort of getting a lot of traction. I think this year I'm seeing a massive resurgence in makeup, where there are lots of traditional makeup categories that have done well, but at the same time, many new ancillary categories have also done very well, at least in October. We'll have to wait and watch how November plays out.
Right. Tell us a little bit about GMVs and what kind of trajectory are you following at the end of this financial year?
So we are operating at 100 crores a month of GMV. This number, a year ago would have been closer to probably 50 crores. So it's closer to 90 to 100% year-on-year growth rate. So on an annualized basis, we are operating at about 1200 crores of GMV. It means about net sales of about 65 to 70 crores a month. So that's where we are. If you look at beauty category overall in India, it would be about $20 billion. So our market share is still small, and there's a huge room to grow for us, and that's what we are focused on. So it's going to be, very high degree of focus on growth. We also run a very efficient business. We've always been very close to profitability for the last 2 years, and we actually broke even in FY19. So we know how to get our business to profitability very quickly if push comes to shove. But I think for the next 2 years or so, we will be extremely focused on growth. We'll also be, looking out to acquire a couple of companies in the beauty or the content space, especially content for beauty. We've been very successful at M&A historically. We've done 2 small M&As. The first one, we acquired a small brand in 2017 called Sequoia. The founder of Sequoia continues to work with us. He ended up building our entire private brands business, which is quite huge right now. And then last year we invested we bought a majority stake in Carmeezy, which is a very state-of-the-art feminine hygiene brand led by 2 entrepreneurs. They also continue to work with us. This year we invested a minority stake. We bought a minority stake in Juicy Chemistry. That's also a fantastic brand that we've added to our stable. And going forward, we'll be very keenly looking at very, very differentiated brands, and see if we could sort of put capital into those brands.
Right. I want to understand the final question before I let you go on the focus areas and new categories of growth going forward. If you could tell us a little bit about what can we expect going forward.
So Priya, the focus over the next 1 to 2 years is going to be to do well at exactly the things that we've been doing well in the last 3 years, which is to focus on beauty and personal care. We don't want to get into any other category as such. Having said that, we will keep doing some experiments here and there to see, to find green shoots, which we could focus on maybe in FY24 or FY25 or FY26. But I would say majority of the focus will be only on beauty and personal care. To increase market share is going to be the sole single focus area for the firm.
Right. A final question before I let you go. Any IPO on the cards? What is the kind of plan that you have there?
As far as IPOs are concerned, not planning anything in the next 2 years or so. We have enough capital at hand, so there is no need to raise more capital. We also think, almost all of our investors are very long only kind of funds. To give you an example, Kedaara has just come in, so they have a 10-year window. World Invest is a family office. There is practically practically no limit to how long can they hold. The money that came into us from Goldman Sachs came from their prop book. Sequoia has just invested this year. So, we have a long way to go before any of our investors need exits. And so, yeah, look, I mean, there's nothing that I can share at this point in time from an IPO timeline point of view. But at the same time, I must tell you that we will stay prepared. And whenever the time is right, we will definitely hit the public markets.
All right, Mr. Taneja, thank you very much for joining us, and we wish you all the very best in your journey going forward. Thanks so much for your time, and thank you so much for being a part of the Daily Dispatch.
Well, time now to say goodbye. Thanks very much for joining us on this edition of the Daily Dispatch. I'll catch you tomorrow at 5 p.m. Goodbye and have a lovely day.